All right, everyone. Well, it is noon Eastern time, so I'm going to go ahead and kick things off, and I'll ask our panelists to join me on stage. Um, Thank you for joining us today for our webinar, How DEI is Transforming Venture Capital and Private Equity. I'm Kayla Kovac-Galton, the Curriculum and Project Strategist at the Diversity Movement. Over the past year, undeniable incidents of racial injustice and impacts of the pandemic have highlighted the importance of diversity, equity, and inclusion. Many leaders in the venture capital and private equity space have begun to prioritize the importance of DEI and are motivated like never before to move from talk to action. Today's webinar is hosted by the Diversity Movement's VP of Products, Kurt Merriweather, who, along with our esteemed panelists, will discuss how DEI practices can create new opportunities for VC and PE firms and startup leaders from all backgrounds. During this hour, feel free to drop your questions in the Q&A at the bottom of your Zoom screen at any time, and we'll try to answer as many of them live as we can. If you're referencing this webinar on social media, please use the hashtag TDMWebinar and tag us on LinkedIn, Twitter, Instagram, and Facebook. I'm going to go ahead and drop out of sight now and let our host take it from here. Kurt, the mic's yours.
Kayla, thank you so much. A quick note before we get started. The conversations that we often have around diversity, equity, and inclusion require us to be vulnerable and to be transparent. And so what I want us to do today is to make sure that we're pushing each other a little bit to be uncomfortable so that we can have some great dialogue. We want to make sure that we're doing this obviously in a respectful way, given the critical topic that we're going to talk about. And so if we're not a little uncomfortable, we know we're not doing it right. So that's one of the things that I would tell all of us as we get started. And so I want to first thank our panelists, Karen Ver, Tim McLaughlin, Lister Delgado, and Lauren Usher for being here today. They participated along with some others in the venture capital and private equity space in a white paper that we created together around being agents of change, being able to transform DEI. And so I want to thank them for their participation in this, and you'll have an opportunity to have access to that white paper at the very end of the session today. So with that, I'd like to have our panelists do a quick introduction, and I'll start on my screen with Tim.
Hey everyone, thanks Kurt. I'm Tim McLaughlin. I'm a partner at Co-Founders Capital. We invest in B2B software companies primarily in North Carolina. We're running our second fund, which is a $31 million fund here. It's managed by myself and my partner, David Gardner. And so I'm interested in talking about this topic, especially from a fund managed by 3 white males. And we often get a lot of questions about what we're doing about that. So thanks for having me on and allow me to share my perspective.
Lauren, why don't you go next?
Sure, thanks, Kurt. Hi, I'm Lauren Usher. I am a G-Beta Managing Director at Generator, and G-Beta is one of our pre-Accelerator programs, non-equity programs at Generator. We have a series of different programs at Generator that we use to carry out our mission, which is to be a community's best partner to invest in their best and brightest. And they range all the way from ideation programs for people who are aspiring entrepreneurs through equity-based programs for folks who are ready for investment. And we also have membership programs and conference events that we put on to connect startup entrepreneurs with investors and community members, corporations, et cetera. Happy to be here today. Thanks.
Lister.
Thank you, Kurt. I'm Lister Delgado. I'm managing partner of Idea Fund Partners. So I typically describe myself as a early stage entrepreneur, but more and more I'm finding myself compelled to describe myself as a contrarian entrepreneur, or rather investor. And because when I look at what drives what we do, I think a lot of it has to do with trying to invest where others are not investing. And we have done that traditionally by investing in early stage sectors and trying to avoid the areas of the early stage segment where others are just overcrowded. We've also done that on a geographic perspective, trying to invest outside of Silicon Valley. but more and more we've been thinking about investing in people who are not sort of looked at in the same vein as the masses. So I think that there's a great opportunity to do a lot of good for the world and to make a lot of money in doing that. So that's me.
And Karen.
Thanks, Kurt. I'm Karen Levert, and excited to be here today. So I'm a venture partner at Pappas Capital, and the method behind that madness is I'm starting a venture fund focused on early stages. Listener and Tim, I guess all of us are kind of playing in that space. Companies in agriculture primarily. And so I've got two innovation labs, Southeast Tech and Ventures and Ag Tech and Ventures, that I've started over the last 17 years. I've got a real interest in early stage technologies that have just great potential in the marketplace. And I realized how difficult it was to raise money for these companies. And we were doing it onesie, twosie. And that's why I've decided to start a venture fund. So I'm partnered with Pappas Capital. Art raised 6 funds over the last 25 years, top quartile performing funds, and they're handling the back office, and I'm a fly on the wall for diligence meetings, et cetera. So that's my background, and again, I'm happy to be here.
Thanks, Karen. And so, Karen, I'm actually going to ask you to kick this one off. So there's been a lot that's happened. If we look at the past, 9 months or so. From the shock of the pandemic to the murder of George Floyd and Ahmaud Arbery and Breonna Taylor last summer. And so in talking to people, the shock of that is starting to wear off a little bit. And so just curious about how you're thinking about things as we look back on the last few months and how you think that's impacting other people that you're coming in contact with.
Yeah, it's a good question. Shock is the right word, right? And I think that the best thing that has happened, I can't tell you how many people have just touched base with me saying, hey, I didn't know about, the Black experience being what it was or is. And I think that's fabulous. I think it has been difficult for people to have a lot of racial conversations. And I hope now people know that it's, that we have more of a comfort level around that. And I'm happy too about initiatives that are underway with entities to make sure that, they're investing in more diverse companies and founders, et cetera. I just hope that it's not talk. Some people are doing it, because of other reasons to have personal gain and gains for their companies. And so I think it's going to take some time to really see how much of what we've learned over these last 9 months makes a difference. I'm totally optimistic, but it remains to be seen. But I know we're all smarter and we're walking the earth differently because of COVID and these social justice opportunities we've had to alight that has been shown on it. And last thing I'll say is we've had too much economic loss and personal loss with COVID, people, the deaths of people, and also businesses failing to not be better because of all of this.
Lauren, you want to jump in on that as well?
Sure. Yeah, Karen said it very well. I feel very similarly in that I'm cautiously optimistic. I think the way that you put it, as a light being shown, is completely spot on, because as we know, the issues didn't begin last summer, but the issues were put under the spotlight last summer for a lot of people. So I too, I appreciate the approach to this webinar where we're saying, it might be a bit uncomfortable for folks who are thinking about this for the first time. And I think that over the past year, we've really come face to face with that and, seen within our different companies and networks, who's really thinking of this for the first time and who's saying, okay, we've been thinking about this for a while, but we're glad that everyone's getting on a similar page. So just like Karen, I hope that it's not all talk. And I really think that because of the level of attention that is being put on it right now and the initiatives that we've seen, across the board, yes, perhaps for some people it will fade out, but I feel, like I said, cautiously optimistic that this will stick and this will be a positive movement in the end.
Tim, how are you feeling right now?
I'm excited to take advantage of some of the procedures and new practices that we put in place, and I'm excited to do that at a faster clip than what we've been able to do over the past year, to be honest. So, I think over the summer it was an opportunity for us to start having conversations, and you really were able to realize who you want to be in business with and people that you want to work with and you want to surround yourself with. And there were more conversations going on about race and about social justice. And so we were able to put some practices in place, which I'm sure we're going to talk about. But then our companies haven't been hiring at the rapid pace that they were the year before, and they haven't been able to raise money at the pace that they were the year before. And we haven't been investing at the same pace that we have been in the past few years. We're still investing, right? But we didn't make an investment from March to December, which was a little bit rare for us. But in December, we made our second largest investment to date. January, we made our largest investment to date. We're seeing things pick back up, and our companies are hiring and growing. And so now I'm excited to see what we put in practice actually, start to gain some traction and take shape and make some real change.
And Lister?
Sorry, I was trying to unmute myself. I am cautiously optimistic. I tend to be a glass half full kind of guy, and so it's my nature to be optimistic. But I put the cautious there in front of the optimistic because I've been doing this for 20 years and I have seen ebbs and flows, and I think not only with what happens in the capital markets, but what happens in society in general, there tends to be waves, and people see the issues. People recognize them. It's the challenge is always sort of getting over the hump that makes it then part of the norm, right? And what I'm wondering is whether the tidal wave is high enough to get over the hump where then becomes the norm, the new normal. And I don't know. I mean, I think we still need to see more. What is going on in the venture capital industry is very interesting right now. We're having tons of conversations. Everybody's writing papers and thinking about the issues. The question is whether it's going to stick. And but I'm optimistic because I'll tell you, in 20 years in doing venture capital for me, I can probably count over the first 15 years with my two fingers the number of VCs that were of Hispanic origin that I met. And in the last 2 years, I met a ton. So there's something changing in the nature and the composition of venture capital, which makes me optimistic.
There's definitely, to use the analogies that were used before, around a tsunami. So I think there's certainly the potential for that. And part of that comes from the statistics that we see. So the business case has been talked about a lot more. And so I think we're all better informed in terms of the statistics that support DEI. And I'm going to kind of lift a few of them. The first is that private equity firms that are gender balanced have a 20% higher net internal rate of return. So if you looked at that relative to a more homogeneous team. Portfolio companies that have boards with more diverse members reported more earnings growth at a 12% higher rate than less diverse peers. And then finally, companies that have above average diversity among their management team outperformed peers in terms of innovation revenue. And 45% of their revenue came from the fact that they were diverse as opposed to other organizations that had 26%. And so the case is not debatable at this point. And so I'm sure many of you have been on in forums like this where you've talked about the business case for DEI. And I don't want to spend time talking about that. I think that's something that's well understood. What we want to talk about, and I know all of you pretty well at this point, we want to get to action. And so, what are the steps that you're all taking to move the talk that we've had into action? And so, Tim, I'll start with you because I know you've got a lot of things that you've started to put underway, and I want the entire panel to participate and just talk about what you're doing, because I think that's really important.
Sure. Well, one thing that, it really kind of hit home earlier this year, we were making our first hire at Co-Founders Capital, our first full-time hire in, the last 5 years, right? 6 years, right? We've made one hire in that time. And I started writing the job description. As I was writing the job description, one of the things that I wrote was, prefer venture capital experience. And right there, I immediately stopped. I'm sitting here looking at myself about how, this cycle is going to continue, when that's a start. So what can I do to change maybe what it means to have venture capital experience? And so I started thinking in terms of what we do with a lot of velocity inside of our organizations. So one example, so we've hired one team member, but we've invested in 29 companies. So now you look, there's another opportunity to higher velocity of investments. We've added dozens of management team members across those 29 companies. We've added dozens of board members across those companies. And one example of something that we implemented was, over the last 6 years, we've had 66 interns at Co-Founders Capital. And over the last 2 years, since we started making an effort, over half of those interns have been non-white males. And so you look and you say, okay, now here's a group of people that now have some venture experience that can see the market. So maybe down the line, when I write a job description with some venture experience, is a wider pool, a more diverse pool to pull from. Another thing that we've done is let's have conversations with companies we're about to invest in. We build financial models and what are the use of funds that they're going to do, after we make an investment. And it's important that they have their insurance and they have and all these line items. Well, one thing we've started putting in is maybe they would like a budget for DEI initiatives in the companies, right? And so now as an investor, I work with that in the model for my entrepreneur before we make the investment. And it forces a conversation. Is this something that you care about? Is this something you want in your organization? And on $1 million+ investment or $2 million raise, what's $15,000, $20,000, $25,000 for a DEI initiative? What's that going to do to your business in terms of growth and ROI and all the great things that are going to come with that? But it forces that discussion and lets you know you're on the same page and that your investors supportive of that. So there's a few examples of some things we're doing.
Lauren, you want to share some things that you're doing?
Sure. Yeah, this is something we've been thinking a lot about at Generator. And, I'll be the first to say we're not perfect and we're still learning as we go. That's part of how we operate, as we build the plane as we fly. But a couple of things that we have done to take initiative in this area is starting specific accelerator programs that are focused on underrepresented founders. So a lot of this comes from the organizations that we partner with. At Generator, we are based out of the Midwest, but we are in 22 countries across the country, or 22 cities across the country. And so the organizations that we partner with are community-based, and they let us know what it is that they're looking for us to provide for them, which I think is a great way for us to understand, their goals and their priorities. So for example, when we partnered with Bronze Valley in Birmingham, Alabama, they said they really wanted a program focused on underrepresented founders, including women and Black and Brown founders. So we have spun up that program in Birmingham and have run a couple cohorts there that has gone really well. We've also started a partnership with Northwestern Mutual in Milwaukee, Wisconsin, where we have started an equity-based accelerator focused on Black founders in particular. And so we are gearing up for that first program, and we've been excited to see the outpouring of support, not only from organizations in the region beyond, but also the many, many founders who are reaching out to us and saying that they're appreciative to see an initiative like this that provides capital for them. And another important initiative that I want to mention that we had started a while back, about a year plus ago, is our lightning rounds, which is a curated pitch session between founders and either accelerators or investors. This year, on March 4th, we are doing our first lightning rounds that's specific to Black and Brown founders. So we made that focus, and we also asked the investors to let us know if they're either experienced in investing in Black and Brown founders, or if this is a new initiative for them, also welcome. And, when we bring on these new initiatives, sometimes we're not sure how they're going to work. We'll say, let's try it out and see what happens. And we were thrilled to see 1,200 plus founders come to us to apply for the program. And we're at 250 investors today, but probably if I checked in with someone, the number has gone up in the past hour. So we've had a ton of interest. And, we see founders all across the board, people who are pretty early and people who have raised a ton of money and had a lot of success already. And when we ask those founders, why are you interested in connecting with us? Why are you interested in an accelerator program? They'll say, because I want to work with someone who looks like me. I want to work with someone who understands the issues that I'm going through. And so that has been really powerful to hear that, yes, it's about the capital, and yes, it's about the mentorship, but there is something very different about going through an accelerator program or connecting with investors who understand where these founders are coming from. So those are some of the initiatives that we've been working on and have started over the years. One more that I'd like to mention, just because I have worked with it very closely and think it's a very important one, is that we have some pre-accelerator programs that are focused on formerly incarcerated entrepreneurs. And we've been doing this since 2018 in partnership with one of our sponsoring organizations, which is the American Family Insurance Institute for Corporate and Social Impact, a VC fund focused on social impact in a few priority areas. And we've carried out this program and are looking to expand it and do a deeper dive into what entrepreneurship looks like for returning citizens. And it's been really rewarding for us. And, we're getting a lot of feedback from the participants to understand how we can best support people who are underrepresented in various ways and people who are underestimated a lot of time within the VC and PE spaces. So I just wanted to mention a few of those. And like I said, we're continuously iterating and coming up with new ideas and open to learning more from the rest of the panel and the audience too.
Lauren, thanks for sharing that. And one of the questions that came in from the chat is, just in those last two responses alone, there's so many resources that both of you shared and practices that you've already started to undertake, that we're going to do this together as a community. And so we're going to make sure that we share those resources out as we finalize the webinar, and we'll continue to send those out and work with the panelists to make sure that we have a curated list of things that you can start to work on as we're trying to do this work together. Lister and Karen will also give you the opportunity to talk about what you're doing. Lister, go ahead and
Sure.
Start us off.
So I'll tell you, we have been thinking a lot about this, and we want it to be purposeful. I don't know that there's anybody doing it right. I don't think that's the point. The point is to just try something and to think about the issues. And there's the set of issues that we can do ourselves, and then there's the set of issues that are more systemic, and I think those are harder. But when we started to think about how we should look at this, we'd come up with three things that we could try to do. And the first one is to just look at ourselves, to do a little bit of introspection. And I think that probably applies to anybody. You review your internal processes, you understand what you do, and really try to think about the things that you try to understand your biases and not pretend that they're not there, because they're always there. And so you gotta just look at yourselves, how you're doing things, and then number two is, for us, was be intentional. So come up with a plan after you look at these internal set of things that we're looking at, that we're doing. How are we? Then come up with a plan to change, to improve. And for us, one of the biggest things was to expand our network. I think venture capital, one of the main problems in venture capital is access to, I mean, I think Tim touched on this. And it's a vicious cycle, right? So, but one thing that we could do ourselves without forcing the world to change is to expand our network, to go and reach out to those entrepreneurs, to change where we're looking at companies. The third thing that we started to come up with in that plan, you know, besides that introspection and the intentionality, was the accountability. And for us, that meant we set targets, we understand our metrics, and we understand what we need to do in order to try to reach some set goals. In our case, it wasn't about quotas. We wanted to make sure that we weren't forcing the results, we were forcing the actions, right? So we had targets knowing that these weren't quotas. And then we need to measure those results. If you don't have a way to measure what you do, you're probably not going to be able to improve that process. And then part of that accountability also is talking about it publicly, discussing what you're doing and what kind of results you're getting. So that's from a deal sourcing perspective. Basically, the business that we're in is looking for companies to invest in and wanting to be more introspective, you know, more intentional and more accountable. Those were the 3 steps that we wanted to take. But then, of course, some of the other things include looking at the people for us. It's just like co-founders, just like Tim, we wanted to understand part of the problem is us, the people in our team. So we have goals for what is the composition of our staff, of our team, not only on the partner side, but also on the extended network of people that influence our decisions. Our venture partners, operating partners, advisors, these are the people who are not exactly day-to-day getting a paycheck from us, but are very influential in the decision-making and the companies that come to us, as well as our interns. So, I mean, I don't know, I'll tell you how it's working. I'm not sure that it's perfect, but at least I think it's creating a process that we can then measure. And if you have that, then we can start improving it. And it's really more market driven. I think at the end of the day, we wanted to come up with a process that was market driven because we felt that that was something that we could sustain. So we'll see. I think we should check back in a year or so and tell you how it's going.
Yeah, we should do this. Mark your calendars for February 2022. We'll come back and do this again then. Karen.
Yeah, so my fund's not underway yet, but from a Pappas Capital perspective, when I went to Art and said I wanted to do a fund, I think right there, being a Black female that's going to be the managing partner for a fund, I know that we'll have more diverse founders approaching us because people, I think we'll feel very open that way. So we won't have to worry about it's happened already. People are touching base that are more diverse. And so we're in a narrow space in ag tech, but I'm really interested in having a super network. And so that people could approach us, even if they aren't doing ag, they aren't in ag, that we can get them connected to the right funds to and invest in them. So kind of a short answer is just, I will be one of those. I want to be writing the checks and making those decisions, and hopefully can affect change that way.
Right, and I think that's a really powerful statement. All of us, all of you have stated before, this the power of creating bridges between one community and another, and that's the heart of what we work for as we do the diversity, equity, and inclusion work we do is creating bridges. And so being able to say, I'm going to help you, even though it doesn't fit in terms of my, my investment thesis, I think is a really important thing to do to make sure that people are getting matched with the right sources that they need to be successful, whether that's capital, or whether it's quite frankly, mentorship or partnership. And so I think that's a really important thing to be able to do. And so one of the questions that's come in from the Q&A here is, we talked about the business case. We recognize this is an important thing to do. And this question is interesting because you would think that there would be more change. So the question is, are you meeting resistance to your efforts? If so, where? Specifically to what? And if the business case is so clear, what's getting in the way? So who wants to start there?
I, so I don't think there's been any obvious resistance to any of our initiatives that we've had, but I will say in the world of investing in startups, a lot, especially for a lot of our startups, changing their process when it might mean slowing down a little bit can often be hard. And so if I have a company that needs an immediate hire, if I have a company that immediately needs to, or very quickly needs to place somebody on their board or add an advisor to help them with the situation, where are they pulling that from? They're pulling from their immediate network. They're pulling it from my immediate network, which is part of the problem. And so if you ask them to slow down and be intentional, as Lister was saying, about how many minority candidates are they interviewing for that position or looking into it, that can be a speed issue that people have a problem with, right? I need it now, which means that you needed to start building your bench and your networks and all that, 2, 3, 4 years ago. And so if that hasn't happened, that can be met with a little bit of resistance. And I've seen that, frankly, inside the portfolio where they want to be intentional, but it's like a time situation.
If I could jump in, yeah, I totally agree with what Tim said. I would the way I would describe it for us is the inertia or friction that exists in the system. It's just systemic inertia. The system is just not set up to work in the way we want it to work, and so it's not personal resistance. It's the difficulty that people have to do things differently. I mean, it's just that's the challenge. Even when you recognize that you want to change it, and the funny thing is even when we want to make a change, the way in which we do things is hard to change, right? So, and then expecting others to do things differently, it's really tough, right? So this is not easy. It's tough. I think one of the challenges that I found is, so just to say, for example, a simple example, getting out there and expanding your network. That's pretty hard. I mean, it's taking me many years to build the network that I have. So to expand and change that, and it's not easy. It's going to take time. What I would say is the only antidote to that is just patience. All right, we just got to keep one step at a time, one day at a time. But it's inertia. It's really not arguments. It's just more the friction that exists in the system.
I can make a comment as well. I agree that I haven't really seen outward resistance, or somebody saying, I don't think you should do this or that initiative. But I think that the way that it comes out is more subtle, and it's people, talking about a pipeline problem, or it's people talking about, it's I guess related to the pipeline problem again, Black founders are working on lifestyle businesses, so it's going to be hard to find them for our portfolio. I think you hear these types of comments that could sound on the surface like maybe they're right, or maybe that's what they've seen, but that to me is the resistance, because if you're not aware that, like Lister said, expanding your network and looking intentionally for these underrepresented founders, then it could seem like a pipeline problem to you when we know that's not a real that's not a real barrier. So I think that it's been those more subtle types of resistance that I've observed with some of our initiatives, and I think a lot of that is about learning more. So I don't take offense to that, and like Lister said, we have to have patience and understand a lot of this isn't going to happen overnight. So I think we do what we can do internally. We first partner with others who are champions of the same issues that we're trying to work to forward, and then I think eventually over time we'll continue to bring on more people as they continue to learn.
Yeah, so I think Lauren, you hit it. It's a lot of times it's not resistance, but if you don't think a certain way, then you limit your own possibilities. And so it's a bias issue. And so that's something that we talk about quite a bit, is it's unconscious bias in some ways, that you require having other people around you to check your blind spots in order for us to make better decisions, whether they're even, quite frankly, investment decisions. You have a thesis, you need people around you who will say, hey, wait a minute, have we considered all the other alternatives? And I think that's the cause of some of the, it's not resistance necessarily, but it's indirect because your way of thinking is limited. And so I think that's one of the things that, we see.
Right. Like, like you're saying, Kurt, with the unconscious resistance or bias, one of the small but big pieces of pushback that we've gotten. So for example, when we start these programs specifically for Black founders, or when we started our lightning rounds for Black and Brown founders events, people will say, oh, well, I thought everybody just wanted to be treated the same, or why would we call out these underrepresented founders in this other way? Like now we're creating a different kind of bias, and it's like those comments and that type of pushback that if you're an organization that is taking this stance, you have to be prepared to hear that kind of resistance and to say, we're taking this approach. We have these many documents and research papers and things to support the approach that we're taking. And, you have to stick with it. And I think, we've even had some moments where we've had to say, there will be certain relationships that may terminate if someone doesn't see eye to eye with what we're doing. And it's another thing that as a firm or as a company, you have to be comfortable with that and have that conversation across all the levels.
And if I can jump on that comment, because that's, I think what Lauren hit on is very, very poignant. And I think that's a big piece of the unconscious bias that exists. In our case, what we try to do to fight that is to think about the market-driven approach. I mean, we are in an industry that is driven by capitalistic principles. Obviously, venture capital has got the word capital in its word. So to sort of imply that you're doing something for the goodness of what it is, it's almost like it's a sin, right? To tell an investor, I'm investing because it's the right thing to do. It's the wrong approach, perhaps, right? So not only are investors, whatever their color, gender, sexual orientation, if you tell someone, I'm just doing this, no, here's my money, and I'm going to do this because it's the right thing to do, they're going to say, well, I'm not sure that I want to give you my money then. But if you tell them, look, I'm going to give you more money because of this. I'm doing this because this is a great business opportunity. And let me show you why. Then the word changes. And I think also it's a much more sustainable approach. So I find that to be an easier way to convince people whenever resistance comes along the way.
Right, and just kind of staying on that point for a second, because there's a question that came in that's relevant to that. And it's really about relationship building to be helpful. In what ways have you leveraged your relationships with diverse-owned VC firms, whether it's Black, Brown, women oriented, LGBTQIA+, or other types of diversity? How have you leveraged that to engage in better advocacy, allyship, and overall investing for diverse founders? And so how have you been able to broaden your network to be helpful to someone, to help them build capacity, quite frankly, to be investable?
I think, if you will, I can take a first shot at that. If you don't have the networks, or you're interested in investing in diverse founders, the best way to do that is to connect with those firms that are doing it today. You look at Harlem Capital Back Street. I mean, there are a lot of cross-culture ventures. I think it's very important. There's a Black Angel group in Miami. For me, to be really connected with those groups, because it's all part of deal flow at the end of the day. And if they have the brand of investing in diverse founders, if you're connected with them, I mean, that those are super important relationships. So I think it's huge.
So I agree with that. The trick is though to be genuine. You know, I think investors who have been spending a significant amount of time now thinking about the issues they have been investing in, for example, African American entrepreneurs or Latino entrepreneurs, they recognize that now suddenly everybody wants to be their friend, and now everybody wants to get their deal flow. And you know, I mean, that doesn't always come across as a genuine activity. So while I do agree that expanding your network is good, to suddenly I think it needs to be genuine, because I think there can be a backlash too of, well, suddenly you're my friend, like show me some real back and forth, and you can contribute as well to the conversation. Just put your money behind where your mouth is and do something, not just tell me that you're my friend because you want to check a box. I think that is the key with the network building and relationship building.
Right, I totally agree. And I wasn't implying that I mean, you have got to have relationships. And I get back to your social circles as well. If those aren't diverse, then it's more of it'll be more of a stretch, because you haven't already put people in your personal lives that you see the value in different thinking and religion and lifestyle and food, everything. And so, but I totally agree with you. We can't be, fake. These are genuine relationships that if you haven't had them, you can have them. But I totally agree that you can't come off in a way that you're just having a relationship with them for deal flow's sake. I'm looking at ways to increase deal flow.
Yeah, I think it relates back to an earlier comment that was made about, being a good community partner and meeting with entrepreneurs, even if they're not totally within your investment thesis. I think this is the same thing, looking at the person's question, engaging in better advocacy, allyship, and investing. So, the first two, I think, are pretty easy to do. You go to webinars like this, and then you connect with the people that you meet in the chat, and you continue to expand your network in different ways, and connecting with organizations in an authentic way that's not necessarily to get something, then I think it results in an expanding network. And then eventually you can connect with, other VC firms or PE firms for specific needs. I think, thinking about our lightning rounds event, it's another one where part of the reason why we carry out the event is because we want to get the startups funding, and it's all for them. So it's a free event. We're just being the table where people can connect virtually. So I think that that has been a really great experience for us to connect with a lot of investors who we had existing relationships with, but also new investors, to say, hey, all we want to do is curate some one-on-one meetings with founders of color for you. So if people were willing to do that, which, who would say no to that? We've connected with them now, and it's maybe our first point of contact for some of them, and we continue to have opportunities. But I think, like what everyone has been talking about, it's diversifying all of your relationships. And, I like your point, Karen, that it's in your personal life and in your work life, so that it's not that when we're signing off of Zoom at the end of the day, we're like going back to a reality that's different, but it's all one and the same. And hopefully you can sign off of work, but still think about these really important issues in our day-to-day lives as well.
Kurt, can I add?
Yeah, please.
I think when Lister talks about being genuine, I think it goes back to how are you behaving, before you made this an initiative, at your firm or with your group. And so I've worked on this panel. I've worked closely with Lister in a lot of different things, and I know that we were always willing to help entrepreneurs that didn't necessarily fit our fund thesis, right? But it's about being genuine with them and saying, hey, I help other companies, maybe connect them to the right sources of capital or mentors or advisors anyway. And I'm willing to do that with you, even if it's not necessarily a fit for our fund. So you're genuine with that conversation, but it's not just a quick shift from, I would only talk to people before if they were a fit for my fund. And now all of a sudden I'm going to change this philosophy, right? It's, you were doing that anyway, but now go and maybe look at different areas where you can go and talk to founders that maybe you haven't talked to before and provide that same value and guidance and have those same conversations. It increases your network, even if it's not, it's something you were doing anyway. Even if it's not I'm only going for companies that I'm potentially going to invest in the next 12 months.
What advice would you give to, so that's great in terms of, I think, the investors being intentional about reaching out to underrepresented founders. And so I would flip the question. So if I'm an underrepresented founder and I'm trying to increase my visibility, what are some of the steps that I should be taking to make sure that I'm getting the right connections?
Well, I think one of them is, being genuine on the other side, which is, hey, this might not be a fit for you. It may or may not be a fit for you specifically, but here's what I am trying to do. Can you make an introduction? Is there somebody in your network that I need to be talking to? And not approaching a conversation with an investor as the end outcome is only a positive outcome if there's a check written and there's an investment made. I mean, that's what networking is all about. It might not be you, but it might be somebody that I know that can help. And so I think approaching it in that manner, which is, here's my type of business, not a fit, but I'd like to talk to you, get some advice, see if there's anyone that you know. That's how we get this conversation started. And I love going into meetings with entrepreneurs that we can set expectations with each other very early on and don't feel like there's, this sale that has to, this transaction that has to happen at some point during that meeting.
I do think that this is a good time to be an entrepreneur. It looks like a bunch of investors are willing to listen to you, whether you are, well, I'm not sure whether that's the case yet, but at least it seems like things are starting to change. Whether you're a woman, a Latino entrepreneur, a Black entrepreneur, it feels like things are getting better. But I will be honest. I think I would start with the people that look like them, right? I mean, if you're a female entrepreneur, go first to talk to female investors. If you are a Latino entrepreneur, go talk to Latino investors. I think it's going to be the easiest path. Is what everybody does. It's just how you can relate to. Now, I wouldn't stop there. I think I would then go to people who are opening up their doors to them. So go to the easy path first, but don't stop there either. Go to the big brand names eventually, even those who have the door shut. I wouldn't stop there. So I think the point being that entrepreneurs have it tough. They do, because it's not easy to get money, and they need to get it from wherever they can. And they should go first to where the friction is low, and then but keep trying until they get the money that they need to build their business.
I totally agree. So I'll be a plug for an accelerator, that is maybe a slightly lower hanging fruit. So don't knock accelerators, before you kind of check them out. You can look, like Lister said, for accelerators that are specifically focused on underrepresented founders or specifically focused on different groups, even within that umbrella category. And I think it provides a lot more than just capital, but it also will help you with that next step of getting access to investors, getting through the warm intros that are still, unfortunately, the way that a lot of first connections work. So I would definitely say, take a look at accelerators, Google in your area or online. It's kind of easier now than ever before, because a lot of things are virtual and because a lot more places are putting a focus on underrepresented founders.
I totally agree with all the comments made. And Lauren, as it relates to accelerators, with COVID, one thing that has changed is a lot of them are virtual now. So, and you can find an accelerator in just about any business that you're working on now. And so if you can get connected there, that would be great. At the end of the day, people invest in people they know. I mean, that's the age old why we're here right now. And so it's so important to build your network. And if that means there are associations affiliated with the type of business or sector that you're in, if you can get involved there to meet other people that are connected. And once you get connected to your first investor or two, you have to make sure they're really connected, because one investor can't fund your entire business, or typically they don't. And so it's really important to be connected with investors, all the folks around the horn here that are connected to other investors, so that, I mean, I really want, because we had such a hard time fundraising over so many years, that I want to be able to connect with investors that say, you focus on the business and we're going to help bring those other rounds in as long as you're meeting your milestones. And so that's just something to ask investors, like, what is your network like that can help syndicate, bring other dollars in alongside of theirs? But again, it's so important to have relationships at the end of the day.
Kurt, I think one important thing I wanted to mention off of what Karen just said, which is when an entrepreneur comes and is looking for capital, I hate when I have a meeting where I leave where I don't know where to direct them, right? I always want to be able to turn them to someone, whether they're hiring somebody or they're looking for a source of capital. So let's stick to a source of capital. I would love to be able to direct them. One of the things that's a challenge is that first check, that early capital for these entrepreneurs. And when we see deals that are investable from a VC level, a lot of times there's a slide on there that says we've raised 150,000 so far from friends and family, or we've raised 400,000 from friends and family. And my thought process is you have pretty nice friends and family, right? And so when that early source of capital doesn't exist, when angel funds start acting more like VC funds, when there's less micro funds. I know there's a growth in micro funds, but they have to stay investing in the early stage. Even at Co-Founders Capital, as we grew our fund size, we started writing a little bit bigger checks, which moved us a little bit later in the game. And now we're not quite investing in pre-revenue. So now there's a gap that exists there again. So how do we make sure that there's places where I can point entrepreneurs at the earliest stages, the earliest sources of capital, to give them an opportunity to get the point where they can get to the larger sources of capital? And so we need the micro VCs, we need the angel funds to invest at the early stage, we need individuals to write some early checks into these entrepreneurs. That's what gets everything seeded. That's what gets the momentum going.
I want to take a question from the Q&A and go back to some conversation we had previously. So this was around some of the structural challenges that exist and making sure that we're making the shifts from a DEI perspective. And so the question is, can you talk about the power of large investor groups such as pension funds in serving as forces for forward-thinking change around DEI, meaning firms are going to be expected to walk the walk, not just talk the talk, and large pools of investor capital will be watching?
Sorry to jump back in on this one, but we talked about this as a group a little bit yesterday, where I said there's a responsibility from the investor to have oversight on where they're putting their capital, and that people they give their capital to are carrying out on these initiatives. And that doesn't only mean an entrepreneur. So if we have a $20,000 annual budget for one of our portfolio companies to invest in DEI, I'm going to make sure that that company follows through and actually spends that money on what we agreed upon to do. Well, guess what? I raise money from people too, right? We're raising money from investors, institutions, and if they care about DEI and they're going to hold groups accountable, I'd like to think I'd be doing it on my own. But our investors can hold us accountable for carrying through on those initiatives. When we talk the talk and raise the money, now it's time to walk the walk when we deploy the money. And so there is a responsibility, I think, on those investor groups.
Yeah, there's some, it's getting, well, you look at board seats for women in California, like companies can get fined, public companies, if you don't have diverse boards. And some of the pension funds are in a situation where Well, one, they really know. I always go to the New York Comptrollers Conference. They have seen the results of diverse partners, or diverse firms, and so because of that, they've got a lot of they're very focused on doing that. And I was going to mention one other thing about the pension funds from I may come back to it. Performance was one thing. I just drew a blank. I'll let Lister talk because his microphone's off, and I'll circle back.
Happy to give you a chance to think through the answer, but I think Tim raised a very good point. So there are some changes that are much more difficult. We can all change ourselves, but the system is very difficult to change. But if you start at the top, typically, money especially sort of, so when it comes to the sources of funding, if you start at the head of the funnel, that money will ripple down. And if you have a mandate, or if you have capital that has targets for particular sources, I mean, I'll tell you, raising money for venture funds is very hard as well. I mean, raising money for entrepreneurs is really hard. When you're an investor and you're a VC, you got to put yourself in a bucket. You got to define your bucket and define your criteria. And if what you think is the right thing to invest in because you're going to make money doing that way, you can have a great strategy. But if that doesn't fit with a bucket from a source of capital up above you, it doesn't matter how good your criteria is. So I think some of these systemic changes can have a very deep ripple effect if the sources of funding at the entry point are saying, I want this, I want to invest in this. And then that makes those big endowments, for example, affect what funds of funds do. And those funds of funds affect what venture capital or private equity and venture capital do. And that's going to affect what the entry points are. So, I mean, I think none of these changes are going to affect the whole system, but there are some changes that will have a much bigger impact. And the edges, especially at the high levels, definitely have a significant impact down the system.
Real quickly, and Lister, you're right on. What I was thinking about from the pension fund perspective, if you think of the type of people that put money into those pension funds, the diversity, the firefighters, the state workers, super diverse folks. So we want to make sure, I think that's been some of the change, is we've got to get the diverse people that put money in here to have the people profit and invest in those diverse companies. So I just thought that was an interesting comment that someone made not long ago.
Okay, so we're going to do a lightning round because I would love to talk for another half hour. I know we probably have 3 hours of content, and so really excited about this. So I want you to spend 15 seconds giving somebody what's the one thing they can do based on what they've heard today. What can they do? It's actionable. Starting with Karen.
Ooh, 15 seconds. Well, one is just having the mindset first. You can't and not expect things to happen overnight. We've got to start someplace. So if your intention is there, then take those next steps, put a plan in place.
So
figure out what you're doing with high enough velocity to start making the changes. So if you're hiring a lot, start there. If you're choosing vendors a lot, start there. Right? What are you doing with high enough velocity to start making some change? And then the longer, bigger, slower things will take shape.
Lister.
I'll just repeat what I said earlier. Happy to share more on this, but look at yourself. Look at yourself and how you're doing things, and then come up with a plan to change that, to improve what you're doing, and then be accountable for yourself. Sort of put measurements in place that can help you understand how well you're going along the way.
Lauren.
Yeah, I'll say, read the books, watch the documentaries. It's an issue bigger than VC and PE. So get your foundational knowledge under your feet first, and then totally agree with Lister and what everyone else said, which is collecting your data, know your baseline, and set goals.
Well, I want to thank all of you. We're at the end of our time, unfortunately. So thank you so much for spending time with spending time with us today. And I hope those who joined us have gotten a lot out of this rich dialogue, because there was so much information that's shared, and we'll make sure that we do a recap of this. At the end of the webinar, you're going to see a 2-question survey in your browser. We welcome your feedback and ask that you take a minute to answer. We're going to release the white paper at the end of this session, so you'll see that as a follow-up email. We also are going to have a roadmap that talks about actionable steps that you can take, and we'll release that in March. We're going to continue this conversation at our learning portal at the portal.thediversity.com, excuse me, portal.thediversitymovement.com to continue the conversation. And if we can be helpful in any way, please let us know and reach out to us at our website, thediversitymovement.com. So thank you so much for spending time with us this afternoon, and look forward to seeing you at our next event. Thank you so much.
Thanks, Kurt.